Technical analysis is a means by which traders and investors can decide on both market direction and prices at which to buy and sell various products.
Well, there are various forms of technical analysis. Classical Dow theory, there's Gann theory, Elliott wave, market profile, candlesticks. What does this enable us to do? Well, this enables us to then decide on direction and price levels that are going to be important to the market. So why would you use technical analysis in your trading? The question I would say is, why would you not use technical analysis in your trading? Technical analysis looks at price. Price is defined by the psychological decisions of the participants. So given that markets are driven by human emotion and the psychology behind markets, these patterns repeat themselves. Where do we see these patterns? Brazilian government bonds, copper, the euro versus the US dollar, the FTSE, all these markets exhibit the same patterns, and that is the reason why we can define those patterns and have a good prediction of where future price movements are and the important support and resistance levels below and above the markets are going to be. The approach I use in my technical analysis is classic Dow theory. This has been developed over the last 100+ years to show where markets are vulnerable to further extensions and to setbacks. Classic Dow theory employs market recognition, pattern recognition, trend recognition, and more importantly, the support and resistance levels that dictate where breakouts can potentially occur and where the next move is likely to be. The key tools that I use in my analysis are moving averages, trend lines, various momentum indicators, Fibonacci retracements and Fibonacci projections, and all of these add up to give market direction and also those key levels that we need to watch, support and resistance, to dictate where accelerations in market direction can occur. We're often asked what time frames the analysis is best suited to. Well, my answer to that is any time frame. There's no reason that the day trader can't use this looking at a 5-minute chart and employ the same technicals that a long-term fund manager uses to look at the long-term weekly, monthly or even quarterly annual chart. So these can be applied whatever the time frame. It's just a matter of choosing the right bar chart, and then from there we can derive, again, support resistance levels, direction, and make the profitable trade. Why use Steve Miley, the Market Chartist and Live Squawk charts? I have 22 years experience at large institutions, 3 years as a director at Credit Suisse, 15 years previous to that at Merrill Lynch, covering multiple asset classes, speaking to large institutions, hedge funds and central banks. You get delivered multiple daily reports with that USP of audio-visual. You get the wealth of experience that comes from working for major institutions for the last 22 years. And tied in with the fundamentals that Live Squawk can provide, our technical analysis can be beaten by no other.